how should you borrow money? In today's episode, I'm going to give you a few options. I'm going to help you out in terms of the main ways you can borrow money, and also consider, is it good to borrow money, or should we budget in a way that allows us to maybe avoid it? It's tough times at the moment, but today's episode I'm going to cover them and help you if you are in this boat to see what's going to be the option. So thank you for joining me in this episode. To give you a quick overview of what to expect, we're going to look at understanding your financial situation. So that's as in understanding my financial situation. We can ask this question to ourselves. Borrowing options, what's out there for you, the interest rates and what APR is, and what's all this business about. Credit scores and credit reports. These are like a big thing, but we're going to cover them. Only spend what you can save. It's like an idea that I like to share quite a lot. Comparing lenders if you need to borrow. Lenders is basically banks and providers. The fees and charges, as well as any assistance like from the government. Can someone else help you rather than borrowing money and putting yourself in debt? Also options for seeking professional advice. So stay tuned. We're going to have a nice jam-packed episode today. As always, Working for Yourself podcast at zulftalks.com. Luckily, I can give you all of this information I'm talking about in this form of a presentation on my website. If you go zulftalks.com, you can actually download. You click on the first button on the website. It's show resources, and it'll take you to a page where you can put your name and email address in, and I'll send you this presentation as well as some extra notes. So you don't have to write through this. You can actually just relax and hear me, and then you've got all the notes that you need supplied directly to you. So what are we saying? Understanding your financial situation. What's that all about? Everybody's financial situation is different. Some people will earn a bit of money, save a bit of money. Other people are in a place where they've got lots of commitments, so it's very hard to identify and find out what's the best situation without getting like financial assistance. So I always recommend you speak to some professionals, because obviously this is just a podcast episode for me to explain to you what are the sources out there, what can you look at. It's more informational purposes, so seek professional advice. But to understand your financial situation, the easiest way I find is, not a lot of people will do this, but just look at, if you're using your bank account, log into your online banking, look at your transaction history. What did you spend this month? I'm already hungry. What did you spend this month? How much did you spend? What were the main big items you paid for? Some things you can't avoid: rent, house bills, insurance, car insurance, water bills, electricity. Okay, that's fine. Find out how much those are. Find out that amount. Look at any additional things that can help you. These little things mount up. So have you got Netflix? Have you got Amazon Prime? Are you paying for Uber Eats all the time? These little things can help you understand your financial situation. You find out what works for you, what doesn't work for you, what can you adjust to help you save a bit more money. So when we're looking at borrowing, firstly, it's very important to find out where you are before you keep borrowing, because if you borrow more money, you're just going to make more of an issue for yourself, because you're going to have more money that you're outstanding and you're borrowing. So always consider your financial situation yourself before looking at borrowing. What's the types of borrowing out there? So there's a few types of borrowing that you can consider, and those borrowing types are, firstly, we'll start from the basics. If you have a bank account, we talked about this in episode 2 and episode 3 of this podcast, Working for Yourself, zulftalks.com, where I explained why you need a bank account, the types of bank accounts out there. Some offer you an overdraft limit, so that's a type of borrowing. Temporary type of borrowing, so you can dip in and out of it, but that's money you can borrow from the bank which you don't have. So that's borrowing, which is overdraft. Second option would be, if you know you're going to always be borrowing money, think about a credit card. That's an option where you basically have another card similar to your bank account, but it's just credit that money you don't have. A bank account is you accessing money you've got saved and you've got access to. So like, for example, I've got money here. I can use that money to borrow there. What happens when I run out of money? I got no money. Okay, can I borrow money from your bank? And the bank will give you either via your overdraft or a credit card. Other option is a loan. If you're looking for a bigger purchase, like you're buying a new car or something, maybe a loan. Sometimes when you buy cars or some like TVs and stuff, they do special deals where they say, oh, we'll borrow you £500. You can buy now, you pay later. And then you don't pay for a year and then you pay after that a low amount of money, like £20 every now and again. So that might be another way of borrowing money to fund your purchase. But just as long as you're aware of all the options out there, it'll give you more to think about. And should I do it that way? Should I look at another way? And what's the right way for yourself? Like we mentioned, your financial situation. Are you happy to just use a credit card because you know next month you're going to get your wages coming and you can just clear the credit card? That's an option. Like, why go through a full application for a loan when I only want it for a month? Maybe I'll just use my credit card, or I just want it for a week or 2 weeks. I can just put it on the overdraft. That's three types of borrowing there. There's bigger types of borrowing when you're hopefully doing well and you start thinking about buying a house. Mortgage is the type of borrowing. So there's already some ways of borrowing money. You can borrow from friends and family to avoid paying interest. We'll talk about what interest is a little bit later as well. And interest rates, actually that's the next one on my list. Interest rates and APR, annual percentage rate. I think that officially stands for APR. I'll check it for you. But yeah, that's like something else to think about, because you're going to be borrowing money, you're going to be paying interest back. So how this works is, if you've got a credit card and you're borrowing, well, let's just say you're borrowing all of that. You're borrowing some money. If you're watching on the podcast video version of this on Spotify or YouTube, you'll see it. But if you're listening on the episode on the podcast, zulftalks.com, I'm basically holding up some measly little bit of money. So this money is used as a prop. So I can show you like a rolling in deep. Rolling in the deep. That's a song, isn't it? Who sings that song? Rolling in the deep. Oh no, it's a lady. I forgot her name. Yes, let me know. It's gone blank. Okay, so this is money I'm borrowing. I didn't have money. I don't have money. So I'm like, wait, what's going on? Why don't I have money? This month I had the boiler broke down. Oh my days. The car broke down. Together. The car broke down. The boiler broke down. So then what happens? The money you had is gone. And you're like, oh no, I had to pay for all of that stuff. Bank, can I borrow some money please? And the bank's like, yeah mate, here, have some money. But they're not going to give you that money for free. They'll say, okay, if we borrow you that, you're going to have to pay us back that plus that. If you borrow it for 10 days, you have to pay us back that plus that and that. If it's for 20 days. If you borrow it and it lasts for longer than a month, you have to pay us an extra that as well. So now, I've used that money already, but I have to actually pay the money I borrowed as well as extra money. So I've got extra money here that I need to pay them. So now this month I've got my money coming, my salary is coming, but it's not as much as they want from me. So I'll pay some of them back. They have that. But I should have paid this as well. I couldn't pay that. So they say to me, okay, that's fine, you can't pay that. So you pay this as well. So now we're in a situation where, like, what? I need to pay more money. And then I get my wages again. They come here. And this month, that's gone again. Well, some of it anyway, to cover that. So how much is that? Well, 35. So if I paid 35, then I've got less money this month. So if I'm used to running everything on this amount of money, this month is going to be tighter because I've had, so you just get into this wormhole where just like, give me my money back, and then they send you letters. And then they'll be like, what's going on? Why have you not paid us? Interest rate is not as bad as the fees. Because if you don't pay on time, there's another situation where they charge you. So you have to have like an over limit fee, a late payment fee. And that's where credit score comes into the scenario. Credit score is basically your score of how good you are with your money. And if they're going to give you money, they're going to ask you for money. They're going to say, yeah, we'll give you money. But your credit score is like, okay, yeah, you borrowed £30 last year. You paid us back £30 on time. Okay, you got a tick. Or 3 months later, you borrowed $5. You paid it back within a week. We got the money back. Okay, that's fine. You get another tick. Those ticks over time build up, and they see that, okay, this guy borrows money, he pays it back. 1 month he borrowed it, but he didn't pay it back on time. Okay, not a tick, not a cross, like a amber, like a rating. So then they slowly build these ratings up. And over time, 10-15 years, these ratings mount up to different types of credit scores. So for example, if someone's really good at paying all the money back, the bank can search this place which holds all the information and says, how good is this person? Should I give him some money? And they'll be like, yeah, he borrows and he pays back, so give him some money. If you regularly don't pay money back, your credit is going to be bad. When the bank asks, they're going to say, oh, this guy's going to say, nah mate, don't borrow him money. he borrowed money last month and he took 3 years to pay it back. This bank's be like, oh mate, sorry, nah, I need puppets, I need hand puppets. Sorry customer, we can't give you money. We had a search on the credit history, it's not doing too well. So how do you get around that? There's other ways of borrowing money, especially if you've got any financial assistance or any government grants, things like that can help you. It depends. But sometimes a lot of situations happen is where you don't have money, you have bills, people get into debt. That's where homeless people tend to be. There's a lot of different circumstances out there, but then you end up like getting really bad. So it's very important to, where possible, try and see as early as possible what's going on. But it's a dark hole and it's very difficult to judge every situation. So it's hard to see what the right answer is. But if you think of this as, I'm spending what I've got, I'm going to limit the amount of luxury items I'm spending money on. If you're not doing well this month, cancel some subscriptions. Don't pay for stuff that you would normally pay for. And these little things add up over time, because it's normally, if interest, credit scores, APRs, like, if you borrowed £100, like 15%, 20%, depending on what your interest rate is on your credit card or whatever, you got an extra £1, £2, £3, but the higher the money goes, that becomes higher as well. So we need to consider these options to see what works best. But credit reports is somewhere you can check for all of this information, and that normally helps as well. So only spend what you can save. This is like, it's something to consider. It's an early point because not everybody can save. Because if you're in a position like we talked about just earlier, like we don't have enough to cover the bills, why do you expect me to save any money when I'm not got enough to cover the bills? We'll do a later episode about how to manage debt and ways to help like consolidate debt. There's different ways of doing this. You get loads of adverts on the radio that will like, oh yeah, let us know, we'll consolidate all your debts. But you need to consider, is it worth you having 3, say, loan credit card overdraft, and they're at low rates, compared to this guy who's like, you know what, we'll consolidate all of them into one payment, but then they'll say, they won't tell you what the rate is, or they'll charge you a higher interest rate. So it's in one place, but you're paying more money back. So there's different situations. It gets complicated quickly, but this is where you would have to take time to sit down, look at the information and find out, what is it that I've got? How much is it costing me? Will the situation help me? So in this example, borrow only what you can afford to repay. This is like, if you're in that situation, this is where it avoids you getting into the debt. Understanding the terms and conditions of any agreements you get, and plan for unexpected financial challenges. So like we talked about a little bit earlier, if you're regularly putting money away, in one of my savings episodes, episode 3 in this season of the podcast, we talked about savings accounts and how when you get wages in, try and put a little bit away, which then slowly mounts up, which becomes your backup pot. So if you have a boiler breakdown this month, you've got like $400, $500 or pounds there to help towards that cost, so it's not coming as a shock. So when the times are good, prepare for the times that will be bad, because you never know if what's around the corner. Because some people use all the money. This month I've got, I don't know, $2,000 or something. They'll spend all of it. Oh yeah, we did well. But if you spend a little bit of time thinking about the future, you'll avoid having any big financial losses, if that makes sense. So it's all about planning. If you're good at planning, excellent. If you're not, you spend a bit of time, think about it and see if it will help you, because then you won't stress in future. And if you're already in the situation, then that's where it gets tricky, because then you have to pull yourself out of the situation, which makes more extreme changes. Can you start walking everywhere? Get rid of the car. If you're in a place where you don't have money, you need to do extreme things. Start using the bus. Get rid of your car. Don't buy anything other than your essentials, which is what it used to be in like war times, very early like years ago. So I think people are used to luxuries these days, which you have to think about when you're in a bad place. It's very hard. Comparing lenders. What does this mean? Lenders are just basically people that give you money. So this gets interesting pretty quickly, because you can borrow money from different places at different interest rates, and they charge you more or less money for that. How can you find that? This is a good place, such as internet. You can go and search like money saving supermarket. You can find places where, if you do your car insurance, you probably do like a list of 20 places where they do car insurance, and you see, okay, there's number 1 on the list is very cheap, but you know what, I don't want number 1 on the list. It's cheap, but number 3 on the list actually gives me extra breakdown cover, and actually covers if there's like someone hits you who's not insured. I'm covered for that. So I'll pay an extra 50, 60 pounds, but I've got extra cover. So sometimes the cheapest is not always the best. And using those sites, you can look at the details of that. In the same example, you can look at credit cards and loans and those types of situations to find out, comparing which bank is good versus the other bank. How long are they offering that for? Can I use this bank for borrowing for a certain amount of time? Then go to another bank and pay off that money and then move to another bank at a lower rate. So this is where it gets like you can juggle your money around. And the main situation here is spend some time looking at the facts. So it can get complicated, but when you're speaking to a bank or anybody, speak to them like you would speak to a person. So say, okay, right now I've got £1,000. Let's use an example. I've got £1,000 I'm in debt by. It's costing me $300 a month because I'm paying interest and fees. I'm at 18%. So this is the core information of that finance. You go to the bank and say, what can you do to improve that situation? And they'll say, okay, what we can do is we'll pay that loan off. When your loan comes to us, we'll put it at a rate of 15% rather than 18 that you're paying. We'll give you 15%, so that's 3% lower. We'll put it on a freeze for a year where you don't pay anything, and then after the year you can pay interest off towards the account. This will affect the interest and how much you pay off, but you've got a year of savings. So don't go, while you've sorted that out, don't go, yay, I've sorted it out, let me spend more money again. You have to clear that off and then start from what we did here in episode 1, savings, how to look at savings, where to put accounts. But lenders, they think of them as people. They're a big scary company. They want to make profit, but they will outdo each other to try and make money. So in that example, it can sometimes work for you because one bank could be like, yeah, we're lowering our rates to compete so we get more customers in. And for you, that might help because you pay less money and it costs you less. So research, and a bit more research will help you, especially with that. And these fees and charges as well. So sometimes they might offer you a situation where they'll be like, yeah, we'll pay off your loan, but when you move over to us, we charge you 3% fee for moving everything over. So you'll be like, you have to outweigh, okay, I'm saving 3%, but they're charging me 3%. Does it make a difference to me? They're very, very clever these days with the banking situation, how they're doing it. So you need to be careful and look at it holistically and be very, especially with banking. A lot of people won't look at the small print. The small print can be difficult to understand and look at, but if you look at the key bits of information, the main question you should ask is, this is what I'm paying. If I borrow money, will that new money that I borrow be cheaper than what I've already got? Can I look at how much you're going to charge me to borrow this versus this? And will you charge me a fee? Is there anything different than what I've got already? You can ask them and speak to them, especially if it's a bank, and find out why they're charging you. And sometimes if it's your first time, you can actually ask them to take it off as well. So they get like, oh yeah, it's my first time, do you mind? Like if you have a late payment, and it doesn't always happen. So there is communication there. It's worth thinking about, but charges can be quite tricky with banking. What else we got? I'm getting excited today about this episode. Oh yeah, government schemes and assistance. Did you know, depending on which country you're in, that you can look at government sometimes for support? They offer specific savings accounts dedicated to people, so like save to earn, where you could put a little bit of money into a government type savings account and they'll give you a higher rate of interest. So that's an option. Also, sometimes they offer loans if you're working for yourself and you're a business and you've got employees and you're paying money. You can actually borrow money towards the wages, and then when you're doing better, you can pay that money back. So it depends where you are in the world, but that's an option to think about, especially if you're struggling or there's been times where there's not as much money available and there's not been many sales. So government schemes and assistance, you can normally check your government's website for that. Like for example, Direct.gov do a pay to earn scheme, pay to save or pay to earn. Let me check it. I just did a quick search on Google just to give you an idea, and I've come to a page straight away. So this is an example of using your government's website just to see what's out there. Get help with savings if you're on low income. Help to save. How it works is it's a type of savings account that allows certain people entitled to working credit if you have like a lower tax credit situation. This also depends, because if you're not getting good money and you're struggling, most likely you're not getting good salary, so you may qualify for certain benefits. So it's example, they give you £1 for every £50 each calendar month. You can say between £1 and £50 each calendar month, and you get a bonus money. So it's like, that's a little bit better than what a savings account from a bank would offer you. So that's an example of some type of assistance. There is help out there, and it's just keeping an eye out what's available. It's always important to seek professional advice. Most banking situations will offer you some type of like a financial support team or something where you can speak to them, and that allows you to just to put out your options like we did today. I was talking to you about what's out there, but if you speak with your bank directly, they can see your account and notice that, okay, this is what you've got, this is what we can do, should we help you, this is how we can help you. There's also YouTube videos out there, resources online like Citizens Advice Bureau, government website, banking. Just keep an eye out and see if you can get professional advice that at least helps with your situation. Everything I talked about today has been put into like a nice little sheet for you, which you can access on the website, and that is available on my website, zulftalks.com. Working for yourself, all you do is click on show resources, and it actually lets you download everything I talked about, so you don't have to make notes. So to summarize, in today's episode we covered understanding your financial situation, knowing where you are, borrowing options, what's out there, interest rates and APR, paying back interest, credit scores and credit reports. Only spend what you save as like a medium place where once you sort your credit out, try and be better with money. And that's the only way you can do that, is understanding different types of situations out there and how it can help you. Comparing lenders, some people are better at borrowing you money than others. Banks, check the fees and charges they're going to charge you. Look at government assistance and always get professional help in terms of from the bank or financial advisors. So that brings us nicely to this episode. I'm going to see you on this one here, which actually we're going to talk how credit cards work. So in the next episode I'm going to break down what credit card is in its essence, because we talked about different ways to borrow money. Is it good to borrow it via credit card? I'm going to speak to you in the next episode about that. It would be really good if you can leave a review wherever you're listening to this. The show resources are available at zulftalks.com. You can also sign up to the mailing list there, which will allow you to get information to help you on your journey working for yourself.